On today's episode of the Cryptoverse. Fancy a career change? Because a lack of blockchain talent is becoming a real industry concern. Dash is the privacy-focused digital currency that offers transactions with instant confirmations. Its unique, decentralized decision-making and self-funding system make it an ideal choice as a stable and secure digital cash. Click the link in the video description to learn more. Hi there guys, and welcome to the latest episode of the Cryptoverse, your regular dose of news and commentary on Bitcoin, cryptocurrencies and blockchains. I am your host, Chris Coney. Today is the 3rd of March 2017. So let us begin with the market roundup. See, that's the first time in 2 days that I've actually told you the truth. Today there's no announcements, so we are going in straight to the market roundup. Now the biggest winner of the day is NEM, which is up 27.44% today, leaving a NEM coin at 1 cent. Now notice that NEM has a fixed supply. It has that little asterisk next to its total supply there. And the total supply is near enough, like one shy of 9 billion coins. And that's according to CoinMarketCap. It's a non-mineable currency, which is the little asterisk. Now, NEM didn't quite break the $1 million in trading volume, unlike the rest of the coins above it. But that's just an interesting little quip there. Now, the biggest loser in terms of percentages is the old Augur. Not a big surprise because Augur shot up so significantly yesterday. That's normally followed by some kind of correction. That is, unless you are Bitcoin or Ethereum, apparently. And Dash, in fact, has had a little bit of a price correction today, dropping 7.17% on $72 million worth of trading volume. And that's quite a lot for Dash. You know, I said the other day that due to the poor service from the Bitcoin network, I was seriously considering switching to Dash to pay my affiliates, right? Well, Roger Ver tweeted out yesterday something similar. He sent out a tweet and said that he sent $100,000 for a fee of like 0.3 cents, like 0.3 cents, and it was confirmed very quickly. And then he then goes on to say that, quote, Bitcoin used to be like this, close quote. Now also Monero, right down here in 6th position, it's also having a good day, up 12.65%, quite a nice bump for Monero, putting it at $13.97 a coin, and only a couple of $1 million away from Litecoin in terms of market cap. So you see here, Monero has $196 million of market cap, Litecoin $198 million of market cap. So not only has Litecoin been displaced by Dash, Monero could be about to eat Litecoin's lunch next. So the race is definitely on. Moving swiftly on to the Bitcoin price chart, candlestick chart here on bitcoinwisdom.com, price feed provided by Bitstamp. Now I honestly do not know what to say. We've set another all-time high here at $12.98, just under that $1,300 mark. And yes, an ounce of gold today is $1,238. So as of right now, a Bitcoin is worth more in US dollars than an ounce of fine gold. Now, as people pointed out in the comments yesterday, the total market cap of gold absolutely dwarfs Bitcoin, so it's not an entirely useful comparison. But it is an important psychological milestone for people, so we can say that. And in terms of the price analysis, I'll just have to repeat what I said yesterday and say make sure you have a stop loss in place if you have a winning trade right now. You know, we call it a stop loss, but that isn't the only thing that you can use it for. And like I said yesterday, a trailing stop loss can also be used like a trailing profit banker. You know, making sure that you're actually banking profits as you go so you don't have to give any of those gains back that you've already run. Now this price still looks really overheated to me, and this rally just cannot last forever, especially not when the Bitcoin network itself is having such problems with its processing capacity. A quick segregated witness forecast for today then. On the Litecoin network, miner support has dropped ever so slightly, down to 19.7%, and having recalculated, that actually pushes the activation date back a bit, down to the 6th of June 2017, which means it will still activate in time. An ever so slight gain for Bitcoin in terms of segregated witness support from miners. It's up like 0.1%. And that puts Bitcoin's activation date at the 24th of February 2018, which means Bitcoin is still not going to make it. In terms of the news then, we turn to the CoinDesk, coindesk.com. This article is entitled "The Lack of Blockchain Talent is Becoming an Industry Concern." So these kinds of things are, I'd say they're crucially important details that tend to get ignored by the general Bitcoin and cryptocurrency community. Probably because the average person who uses cryptocurrency doesn't care. But I care, so I'm going to talk about it, and it may very well help some people. So let's begin in the red here. It says, at the DTCC's FinTech Symposium in New York City yesterday, executives from a wide range of companies took turns addressing an audience of several hundred financial industry executives to express their concern about what they believe is a problem preventing wider growth and use of the technology. And they're talking about blockchain technology. And the quote here is from this guy, Brian, from the Linux Foundation. It says, quote, "The tech recruiting is very thin, so recruiting is hard," close quote. Let me see here. High demand, low supply. High demand and low supply. What happens when there's high demand for something and that thing is scarce? I'm sure it'll come back to me. Let's continue. So in the orange there, it says, according to Credit Suisse head of blockchain development, Emmanuel Edu, members of what might be considered, quote, traditional finance need to stop being worried about what happened to their slice of the cake. Instead, he encouraged members of the audience without blockchain skills to focus on what they do know and how it may relate to the blockchain-based financial infrastructure. Quote, "Folks that really know how the process works today are going to be very important," close quote. Now, I 100% agree with that, and I know I've had a go at Coinbase several times in the past for being founded by an ex-Goldman Sachs executive, but, and it's a big but, cryptocurrencies do not come with their own magic set of economic rules. They simply match a set of economic principles that we already had, such as limited supply, sound money, and so on. They just happen to enable these economic principles to be used. So when this guy Emmanuel highlights the fact that knowledge of how the old financial system works needs to be blended with the new financial technology, particularly when we want to avoid relying on the average user of money having to change their habits, right? Because that's highly unlikely. Trying to get people to change their habits is very, very difficult, especially if they're the base consumer who doesn't really care about the industry, how it works, how the technology works, or anything like that. So it says here that the job site Indeed.com currently lists 300 job opportunities that mention blockchain somewhere in the description. Of those, 70 are listed for tech giant IBM, 19 for Ethereum startup Consensus, and 14 for the global auditing firm Deloitte. Still, the two most active blockchain developer ecosystems remain the two with cryptocurrencies, Bitcoin and Ethereum. Now that's a golden piece of information for anyone who actually wants to get into the blockchain industry as a career. We could have probably guessed that anyway, the fact that Bitcoin and Ethereum expertise were the most in demand, but it's good to get confirmation so we know we're not insane. Now, if I wasn't doing this, I would seriously consider learning the Go programming language and then getting busy in blockchain development projects myself. However, that's highly unlikely to happen because I have already defined my mission in life, and I'm not prepared to waver on that. So I'm going to continue. Now, moving on here. Under this heading of knowing where to look, it says Todd McDonald, co-founder of blockchain consortium startup R3CEV. According to Donald, the demand for blockchain jobs doesn't add up to the dearth of jobs, but a glut if you know where to look. He says, there is a need for talent, he said, but there is so much out there. Quote, dozens of folks that you don't even know about are hacking away on the weekends. And it says here, he says that in reference to existing employees who may not be appointed in their job description to be working on blockchain projects, but are doing it in their spare time because they're interested in it. And this is where the open source community gets a ton of code contributions from. I mean, imagine how you would feel if you were a cryptocurrency enthusiast, right? And you're working on open source projects in your spare time and then working at a financial institution 9 to 5. So imagine one day you come into work and you hear that the company has just appointed a blockchain technology developer, pretty soul destroying, right? because that could have been you. And I guess this is another example of where the first habit comes into play, be proactive. In this hypothetical example that I just gave, it might have been worth going into the boss's office and then making them aware of your interest in blockchain technology and the expertise that you have in that regard, and then ask to be considered for any such projects should the company decide to begin developing in that direction. Yeah, so that's the benefit of being proactive. So anyway, in conclusion then, after I finished reading this article, do you know where my mind went? My mind went straight to where I see the biggest opportunity of all: education. The biggest opportunity is to provide the training for the people who want to develop these skills and then fill the demand that is available. Now, unfortunately, Cryptoversity isn't mature enough yet to actually take advantage of that kind of opportunity, but I'm sure there are some technology-oriented training companies that are already working on this as I speak. So thanks for joining me today, guys. If you liked this episode, hit the like button. If you disliked it, hit the dislike button. Please leave me a comment below with some feedback and get subscribed. And please support the Cryptoverse and boost cryptocurrency adoption by going to cryptoversity.com/podcast and becoming a patron. From just a few dollars a month, you can secure Cryptoversity's future, get unlimited access to all Cryptoversity courses, and access a private patrons-only chat group where you get direct access to me. That is all for today, guys. I will be back on Monday with another episode of the Cryptoverse. So until then, it's me, Chris Coney, saying bye for now.